With COVID-19 affecting the entire world, it has had a huge impact on global industrial and supply chains. There have been some who have voiced concerns about the world's dependence on China's industrial chains and even suggested the idea of decoupling. So how could the pandemic change the global industrial chains? Is it even possible to decouple the world's industrial chain from China? To talk about these issues and more, I'm pleased to be joined by Ian Begg, professor at the European Institute of London School of Economics and Political Science, Professor Jeffrey Towson, host of Jeff's Asia Tech class, Professor Qian Jun, Executive Dean of the Fanhai International School of Finance at Fudan University, and Jack Barton, our correspondent in Seoul. That is our topic. This is Dialogue. I'm Zoya. Japan announced it would earmark about 240 billion yen, that's $2.2 billion US dollars, to support its cooperations to get out of China, either relocate back home or elsewhere in Southeast Asia. So let me start with you, Jack. Why is that, and what is the general sentiment of the Japanese businesses towards decoupling from China?
Well, in Japan, these things are often very political. We're seeing that in the current trade row with South Korea. So in these situations where there is a sense of national uncertainty, it's not uncommon for the leaders to step in and try and come up with an active policy. Very different to here in South Korea, I might add, where it's the companies that are pushing for more help with reshoring and the government taking a very passive stance, even though there are some measures, the company's calling it far too little. But for Japan, always concerned particularly about the security of things, particularly with healthcare equipment and the likes. This is always going to be an issue, political football, some might call it, and so it's very unsurprising. Most analysts I've spoken to here say, anyway, to see Japan making this kind of a move.
And Professor Qian Jun, many people say China is probably the only country that in the world has all the industrial categories listed on the industrial classification of the UN. That is why probably China has become a key part of the industrial chain. But did China see this coming, that some countries and companies may be brooding over the plan to move out of China because of the concerns of overdependence?
Actually, yes. Even before the virus hit, especially during the past 2 years, given the trade relations with some other countries, people, including Chinese companies, do see there's a possibility of some factories, some companies moving away. If I can comment on one point on the Japanese government's announcement, from what I heard, from the perspective of the companies, they do have an incentive to duplicate, what they call, to have an insurance policy that if there's a breakdown in China, as we've seen in the earlier months of this year, they need to have a backup unit, if you will. And then Southeast Asia, because of the traditional ties with China, Japan, and Korea, it's a nice place to have that backup plan. So from what I heard, even the Japanese government's policy is not to sponsor the Japanese company to completely move out of China. Rather, is to help them to have a backup plan. Now, as you mentioned, one of the strengths about China is that China has all the important segment on any of the product chains, especially for manufacturing. Not only that, from where I am located in Shanghai, you don't have to move very far to get all the ingredients, to get all the suppliers, to get the shipping requirements. And that is the strength of the Chinese product chain, if you will, is that everything can be done and made very efficiently, not all over China, but in a region of China. So it's actually difficult for an important segment of that product chain to completely leave China, because that requires a lot of investment. And the replacement, wherever it might be that in Mexico, be that in South Asia, there are important differences between those other places and China.
But the problem is this is not only happening in Japan or South Korea. The same day Japan announced the fund, the White House National Economic Council Director Larry Kudlow said in an interview with Fox Business Network. He said 100% immediate expensing across the board for plant, equipment, intellectual property, structures, renovations. In other words, we had 100% immediate expensing. We would literally pay the moving costs of American companies. So, Professor Chen, it seems the American decision makers are in mood of moving their businesses out of China back to the States at whatever cost.
So I did see that, actually I did see that interview, the very interview on CNBC, if I remember correctly. So again, the US government is partially sponsoring the move. But at the end of the day, for the most part, the decision whether to relocate, in this case in particular, to relocate outside of China, it remains in the hands of American corporations. And for them, in the longer term and in the shorter term, it's an economic decision. It's a business decision. As I said, China has many important advantages of having all segments of the factories located in China. So even if the US government is helping them, is financing them to move out, but after they move out, let's say they relocate to Mexico, you still have to compare to have a factory in Mexico versus having a factory in China in terms of profit, in terms of efficiency of labor, and all these other factors. So again, helping them move is just the first step. At the end of the day, to me, for most of the American corporations, as do most corporations around the globe, if it's a business decision, they will make a business decision. And there are important reasons for them to keep at least some part of their production or services inside China.
And Ian, what do you make of this decision? Because do you think it makes economic sense for the corporate America to move out of China or to anywhere else in the world?
Well, like Professor Kern, I'm an economist, and economists work on the basis of trade-offs. There's a trade-off for American companies. If they go away from China, they're foregoing cheaper components for diversification of the risk of one source of components drying up. It's worth going back 3 months on this. When the initial lockdown occurred in China, the concern was that the supply coming from China would no longer be available. Now it's evolved into saying, well, we're too reliant on China for certain things that we need at particular times. Particularly the medical equipment that's being required, face masks, protective equipment, and so on. So it's evolving as a policy concern. I think that any corporate will say, we've looked at what happened 3 months ago, we saw the risks we faced to our production process outside China, that reliance on China may be damaging to us, therefore we must think of having a backup of an alternative. There's then, this is overlaid by the politics of the American election, in which it's yet another example of Make America Great Again, the infamous Trump dogma, where he wants to say repatriate and let's not depend on China. So there are layers of things going on here.
But Ian, a backup plan is extra burden financially, and somebody has to pay for that redundancy. Would it really make economic sense for those companies?
It's a trade-off because you're paying a little bit more for reliability of supply or for being able to offset one competitor against another. Don't forget that in some cases what this is about is being too dependent on one source. Now, I know that China is not a single source. There are thousands and thousands of companies supplying these things. But if you find that your supplier has somehow or other been unable to supply you, then you incur a cost. So it's a form of insurance to take out, to go to a second supplier and say, in the event that I need you, will you be around?
And Jeffrey, if some manufacturers or some businesses want to move their operations outside China, what sector may be more likely to see that happen, and what might be their strategy to do that?
Right. I think, the talk of government and policy, I mean, they're often speaking to different issues than businesses think of. The ones that tend to get business leaders and CEOs' attention are things like tariffs. If there is a 25% tariff manufacturing in China versus somewhere else, people are going to put that into their cost structure and decide at a certain point, maybe we don't move our factory, but maybe the next factory we build is in Vietnam, and therefore we cover our bases. Tariffs tend to be a lever that matters for businesses. The other one that tends to get their attention is access to critical technology, which is something like a company like Huawei is dealing with, where suddenly their ability to access semiconductors is not as clear as it used to be. They have to respond to that. You absolutely have to. So generally, sort of tech bans and tariffs really do result in actions. These comments about Japan offering loans, or Larry Kudlow in the U.S. saying you can expense this year, I think they're just going to kind of wait and see if that's real. And even if it is, it's just not that big of a deal.
But those things you talked about are actually political decisions by a administration of a government. That may change when the government changes hands.
Yeah, the political discussion, I think, going on right now, it tends to be two different issues that are a little bit mixed together. Like, one of them is this idea of something that is critical or rare and not being too dependent on that. So the U.S. doesn't, politician-wise, doesn't want to be too dependent on pharmaceuticals coming out of China right now, given what's happened. At the same time, Chinese companies don't want to be too dependent on semiconductors coming out of the U.S. So when it's kind of a critical or rare thing, you hear this idea of diversification. We've got to be not too dependent on anybody. But the other issue floating here, which is policy-driven, is this idea of where is high-value manufacturing going to be 3, 5, 10 years from now? AI, advanced robotics, electric vehicles. And all of these countries, U.S., China, Japan, have their own strategic interests in helping their own companies do well in those sectors. So a lot of times when you hear politicians talking about criticality and dependence, they're often talking about longer-term strategic goals of we should be very good in AI in China, in the United States, in Japan. They tend to get mixed together, these two ideas.
And Professor Chin Jun, I want you to weigh in on this. Is this more about who is going to gain advantage in those areas, like Jeffrey mentioned, high-end manufacturing, artificial intelligence, robotics, bioengineering in the future?
I do think that is a factor. Certainly, for these so-called very critical industries going forward, all the major economies have plans to help their own companies. Political reasons aside, it does make sense that for those industries that we think are very important, countries want to be independent in terms of the product chain. That's natural. So let me put it this way. I won't be surprised that in the next 1 or 2 few years, there are some industries, and we were already seeing this, that there is going to be some sort of less integration, I'll put it that way, less integration between China and some of these developed countries. But as been discussed, from the company's perspective, a lot of time their thinking is to have this duplicate. They want to have this backup. Now, clearly, there's an incentive to have the backup outside of one country, because that's the idea of insurance. But to me, that's still different from completely moving out. And it's important to stress that as long as China remains efficient in terms of the running of the entire product chain, the business environment, and so forth, China remains an attractive. So again, even though there is no extra factory being built in other parts of China, the one big factory like Tesla, like many other European and U.S. companies, are still in China, and they're actually doing
But what Jeffrey
very well.
said, yes, China is now efficient and profitable, but now everybody's competing for a place for the future. Who will be the most efficient and smartest 50 years down the road?
Nobody knows.
Nobody knows.
That's hard to say. That's hard. That's hard to say. I mean, if you look at these firms, you know, China, U.S. included, it is important to be successful as an industry. You need, for example, you need universities to have very basic research. You need the capital markets being very efficient of bringing these firms to the markets. So it's not just about what we call like an industrial policy. It's not just about government giving subsidies or whatever, financing these firms to move. It's actually much more complicated. And a lot of the times, the best ideas, the best products come out of companies that you never heard of. That's the same thing in Silicon Valley and the same thing in China. So 50 years from now, it's very hard to say. So we'll see.
Well, a lot of people probably agree, this is the story in the age of globalization. But will we roll back from globalization? Ian, could this be a watershed moment because of the virus that many countries are considering rolling back their economic policies inward, in a sense, becoming more economically nationalistic?
Well, there's certainly nationalism going on everywhere. We've already referred to it going on in the US. There was a big European Union meeting last week, the heads of state and government, at which one of the conclusions they came out with was an expression, strategic autonomy. And that's saying we need to have the capacity to keep jobs and economic activity inside Europe, both in response to the immediate economic crisis, but also longer term. And one other concern that surfaced in Europe has been of the possibility that as a result of the recession that we know is in full swing, companies are going to be very cheap, and they want to avoid predators coming in and doing hostile takeovers of European companies. The Germans, for example, have a very strong element of their fiscal response to the COVID-19 crisis, which is trying to prevent takeover of companies whose share prices have collapsed. So there is this concern globally. At the same time, globalization is going in new directions. We can expect to see, as a result of artificial intelligence and new communications, activities that have hitherto been quite protected from globalization, especially in the service industries, now being open to new competition. And that's where a country like India could suddenly surface as the next China, because it has so many software engineers and invests so heavily in the software side of the service side, as opposed to China's emphasis on manufacturing. So it's very much a case of watch this space to see how new activities evolve. Just think, Huawei, Google, Netflix, all these enormous digital economy companies didn't exist 25 years ago.
I want you to have a look at what the social media users have been saying about the decoupling from China. Let's take a look at our web pages of what those social media users have been saying. This early worm said, the questions of decoupling are, will businesses abandon a market 1.4 billion people? And do you have enough workers? Well, it obviously addressed two issues here. So, Tianjun, one is that China has a huge market. That's why businesses stay in the market. The other one is China has a well-trained workforce. That's why companies are reluctant to leave. Are these legitimate reasons for China to remain bullish about its business operations?
I do agree. Both are important factors. In terms of labor, we know that if you look at the coastal areas of China, certainly labor cost has been going up pretty quickly. But when you talk about skilled labor, relative to a lot of other countries with perhaps similar per capita income levels, there is an advantage for Chinese labor. As illustrated, for example, not necessarily a high-tech labor, illustrated in these American Factory, the documentary sponsored by Obama. The other thing is obviously the market is also a big draw because this is the biggest market. The middle class, in the numbers of millions and millions of households, their demand for better life, that means that you make it here, you can sell it here. At the same time, of course, for China to maintain that, China itself has to be open. Despite the fact that a lot of other countries are looking inward, China itself needs to be open enough. Welcome all the factories to be set up here, but also welcome companies to do business. In fact, to help businesses to make it easy for them to make money in China, because as we've discussed, that's sort of the bottom line, right? And especially when you have a tariff disadvantage, then it's even more important to have the foreign countries feel that they can take advantage of the good things in China so that they can compensate for some other aspects. But I agree 100% that the market and labor force are two important factors for China to remain competitive in the short run.
Jeffrey, what do you think of the two factors, especially market? Chen Jun said market is a big draw for the world and it could be even bigger.
Well, I mean, there's an interesting contrast in countries like, say, the United States and China, both of which, at least let's say on the consumer side, have large enough consumer markets that you can pretty much be a successful company in almost anything in China or the US and do fine. That's not the same as if you're doing business out of Singapore or South Korea. You have to inherently be international because you don't have the benefit of a domestic market of that scale. So there's this interesting idea of, are these leading massive markets? I mean, if you want to bet on anything in the next 15 to 20 years, bet on middle-class Chinese consumers and bet on American middle-class consumers, because there's a lot of them, they got a lot of money, they're very smart, and they keep getting wealthier. That's a great long-term bet. But we might not see as much international behavior out of those countries as we've seen in the past. Maybe things change, the rules get more difficult, and it's too easy to turn domestic and survive there. A lot of the most interesting behaviors coming out of places like Singapore because you simply have to go abroad to survive. So there's a bit of a contrast. It's a bit of a plus and a minus to have such a big domestic market.
Yeah. And interestingly, on the day the lockdown in virus hit Wuhan, Walmart announced an expansion plan worth more than $400 million in the city of Wuhan. And ExxonMobil last Wednesday, the biggest energy company in the U.S., began a construction of a $10 billion petrochemical complex in South China. So the coronavirus pandemic did not stop investors coming to China, but actually it could change the way that they do business, right, Jeffrey?
Yeah, it's the companies that are focused on the China market, the multinationals, Walmart, Exxon, L'Oreal, McDonald's, the NBA, things like this. They're not going anywhere. And every poll you read where they study them in China and they ask their intentions, none of them are leaving. That is, they're there for the duration, they believe in the market, and for the most part, they are outside of the political issues. There's not a lot of politics or national security involved in selling cans of Coca-Cola. So that kind of business is just going to roll on fine, and it'll do great. The companies that maybe are a little more interesting are companies, say, like NVIDIA, which is, a semiconductor company out of the U.S. 50+% of their revenue comes out of China, and this is suddenly this is an issue the White House is talking about. So they're a bit caught in a bind of these decoupling discussions in a way. A company like Walmart, they're not going anywhere in China. They're going to keep expanding, and they're doing quite well.
And Jack, on April the 16th, a South Korean chemical giant, SK Group, this is the third largest multinational company in South Korea, they sold 500 million shares of China Gas Group, cashing in Hong Kong dollars. What are considerations behind the divestment? Is it a trend there?
No, that was SK subsidiary Clean Air and Solution, and really it's all just tied into the collapsing energy prices at the moment because of coronavirus, the need for these energy companies to get liquid, and that's what they were doing in a hurry. They've got a BBB rating, and they'd been threatened with a downgrade this year if they didn't deal with their debt issues. It's worth noting that SK itself a little bit earlier announced that it would invest almost $2.7 billion in one of its memory chip plants in China. That's the biggest amount of money it's ever lent anywhere in the world, so clearly still well invest into the supply lines there. That's not to say there aren't these reshoring issues here, companies moving back. Some of them rattled about a variety of issues. It all really began here with the row over the deployment of the THAAD US missile system here, and particularly when Hyundai was denied access to supply lines, disrupted production here. Then the trade war with the US, because of course China is South Korea's biggest market, but a lot of the products exported from here are intermediate goods that go into products that then go to the United States. So this conversation has been around for a while, but when we look at the most recent surveys of businesses, they're not talking about supply line security or these broader political issues. They're just simply talking about things like rising wages in China and deeper layers of bureaucracy and things like that. So we are going to see a shift. We are going to see more companies coming back or going to other places like Vietnam, but I don't think there's going to be a substantial shift, particularly when you look at that investment from SK. A lot of companies are still behaving like that. They're looking for opportunities. South Korea in particular is a close neighbor of China, again, the biggest trading partner. I don't think the relationship is going to change substantially over the next few years.
And Professor Chen, I know your university, Fudan, had a seminar with SK. What is your reading of their strategic intent?
So I agree. I mean, I read the news today. I looked up some of the information. I think it's an investment. It's a business decision. SK Group has been sponsoring actually a signature event of the university. We call this the Shanghai Forum. It's actually multidisciplinary. They've been sponsoring this big conference for a week since 2005. And if you read the agreement they signed with the university, and an important reason for them to sponsoring this big conference in Shanghai, hosted by a university, is to better understand China and better understand the Asian economy. So those are very much in line in being just discussed about these South Korean companies, multinationals. So yeah, I agree. I don't think they'll make smart business decisions and they'll remain in China.
And Ian, we are running out of time. 1 minute left. Do you think the shortage of masks, drugs, and prevention products, because they come from China mostly, will cause other countries to reshape their medical supply industrial chain?
Well, they're bound to, because the intensity of the COVID-19 crisis, especially in Western Europe and the United States, is such that they need reliable and close-at-hand supplies. But it's a temporary phenomenon, we hope at least. I think that in the end what we're talking about is the interplay between two different processes. One is the international division of labor, where on many things China is the best place to get things made. The other is the size of the domestic market, including for things like medical equipment, where you want that domestic market is going to pool the activity.
Okay, we're running out of time. Thank you very much. That's Jeffrey, Ian, Tianjun, and also Jack. You've been watching Dialogue here on CGTN. Goodbye.